Hello there. This is Phil Mylet. I'm with Genesis Financial, also called GenFi360. And today talking to one of my partners who is a very big knowledge base on one of the concepts that we're talking to a lot of our high income earners, small business owners, and such. The product is called Kaizen. And Marty is really good about explaining this because he's been talking to clients and taking care of protecting families' futures and retirements for quite a few years. So Marty Wilberg, I'm messing it up here. Willenborg is his last name. But Marty, can you kind of do your general, I don't know, 30,000 feet level explanation on Kaizen and how it benefits clients?
Okay, thanks, Phil. And hello, everybody. When we're talking about Kaizen, I've been working with people now 6, 7, 8 years on these things. It's kind of a unique concept. And the people that I talk about it that really, really are interested in this, Phil, are number one, they don't think they're quite saving enough for retirement yet. They're doing the 401ks and they're putting money in IRAs and all this and that, but they always feel they're a little short yet. So, number one, I'm going to talk to him about if I could find him some extra money, how that would help. The second thing that we look at, Phil, is how to protect that money. Because again, it doesn't do any good to have all this money put away and then bang, the market drops about the time you need it. And now you're out of luck. So the second most important thing is protect that money. And the third thing, Phil, and this is the cherry on top of everything, is we can get it to them tax free in their retirement. So again, if you aren't saving enough money and you're afraid of volatility and you want this stuff tax free, that's exactly what Kaizen was designed for, is high income earners to help them supplement their retirement in their retirement years.
That's one of the things that really drew me to this product when I started working with, our back at support team. And when I met you and you're explaining to me about, Kaizen and all the benefits, and it resonated. I've, been in the financial industry for 30 years in different facets, and we've all seen the ups and downs. In my time frame, I've been through the dot-com bust, the financial crisis, the boost in interest rates, and recently with tariff tantrums and stuff here. So the volatility is not comfortable for anybody, and they certainly don't want to experience that, when it's time to start drawing off that to pay the bills and enjoy your retirement. What do you find is, really resonates with clients when you start to kind of go to the next level of explaining how Kaizen works?
Well, what you have to look at here is with a Kaizen, it's like having the best wine in the world. But again, you have to put it in something, a jug or something. So the way this thing is set up, New Investor World designed this thing about 20 years ago for their employees, but it went over so well, they started branching it out over the last 8 to 10, 12, 15 years. And that's when I got involved about 7 years ago with it. But again, it's a fine wine. But the jug that we're putting this in, Phil, is an indexed universal life policy, an IUL. And the reason we do that is because life insurance has a lot of the tax advantages that keeps your partner, and I mean your partner, Uncle Sam, out of the room. I don't ever have to include Uncle Sam in our conversation with my prospects because he's never involved because we're using that jug or that wrapper of indexed universal life because the money grows tax free. You can get at it tax free, and God forbid something happened to your client, Phil. It has a death benefit that it's what we call self completing. That they do this, and a year later, something happened to them. God forbid, everything they dreamt about for them and their family, it's self completing and completely tax free. So the product, the reason I like Index Universal Life for this concept too is it has living needs benefit, meaning that God forbid, again, if you have a terminal illness or if you have some kind of chronic disease, in your older years, you can accelerate that death benefit and use that for a little like a long-term care type of policy. Now, it's not long-term care, but again, it's just an ancillary segment of the product. That's why we use it. So the indexed universal life is kind of a unique concept. It's been around for quite a while, but that's all the advantages of it. Tax deferred growth, you can get at it tax free. And again, you have the benefits that go in it, and everything's completely tax-free, which I always say keeps your partner, Uncle Sam, is in everything else that we're into, right? So again, we want to keep him out of this product because it's designed for one thing and one thing only, and that's tax-free income for retirement. That's why Kaizen was developed from the beginning.
Now, the tax-free income component, I have a lot of clients that are like myself. I'm 55. They're trying to cover, their shortfalls for their planning for retirement. And so I hear a lot of people very interested in index universal life. And one of the things that resonates with me, it's basically provides that life insurance component. Like you said, there's a death benefit, but when they say index, it's indexed to the S&P 500. And
Correct.
what resonates with them is with an IUL is every year people don't realize this, that the insurance carrier that writes that product is basically guaranteeing you a floor of 0%. So at any point in the year, if the market goes down 20% or 22 or whatever the case is, then you don't lose your value doesn't go down. At the end of the year, if the market's up, let's say 22%, what you have to understand is that IUL has a cap, and it's usually it's just a function of what current market conditions are. So, but let's say it's 12%. The market finishes up 22%, you get a 12% participation. But the benefit for that, what you give up, is that you never lose money, and that's how the relationship works. Now, one of the things that, it does take a little explanation, so we don't need to spend too much time on getting into that because we can talk about that separately with the clients. But when Kaizen comes in, now what happens there? Talk to us about the sweet spot on where that extra kicker and what's different with Kaizen versus just a standard IUL.
Well, with Kaizen, you have premium financing, you have banks that are helping you with this. The biggest thing here is a lot of clients, it's a 5 payments and you're done. So you make it 5 annual payments each year. The bank is really close to that, matches that. So you've got all that money going in for the first 5 years. The next 5 years, you're done. Now the bank pays that whole premium, Phil. So again, they're putting all the money in. So for every dollar you're actually putting in, the bank is putting $3 in over 10 years, and you get to use that money. The
So
next,
let me hold you up. So for the first 5 years, I'm the client. I
yeah,
put in, let's say, usually the minimum is about 20,000 for per year, and then
right.
the bank comes in and matches me for those first 5 years.
Yes.
All
So
right.
you actually have like $40,000 going into the policy for the first 5 years. Then you're done. The next 5 years, the bank is paying that whole 40,000 for you.
So they
Okay.
take up my payment in addition to what they were paying.
Right. So that's where you get the 3-to-1 leverage. And
Okay.
that's the best thing about this. And then the 11th through the 15th year, nobody puts anything in. We just let it, what we call cook. We let it sit in the S&P 500 or whatever options you choose, and we let this thing grow. Then the bank comes in this after the 15th year, and they take their money out with interest and stuff, and you get what's left. Okay, which is usually a pretty sizable amount.
So
A lot of
they charge us as the client a percentage for that loan that they give us for the time that they've been adding the money, not
Right,
just 1 through 5, but year 6 through 10.
right.
So that gives them the benefit because ultimately they're protected against that cash value, if I understand it correctly.
Yes. And the biggest thing here, Phil, if you put one on like on yourself, is the only collateral is the life insurance policy. You don't have to put anything else up. Uh, God forbid if you ever had to get out of it or something like that, the collateral, the bank gets paid first plus interest and you get what's left. So again, that's how you can get this really nice income at retirement.
I know one of the things that, a lot of higher income earners, like when I say like people that have estates that are 10, 15, 20 million or, more so north of that, but I didn't really learn about this until I, really got into this aspect of the financial wealth management world, but they use what's called premium financing. And
Yes,
what also resonated with me is that where premium financing, people actually have to put collateral up, like their homes and other things. So the bank comes in, but the problem is if you get a downturn in the market, like you think about, what people went through in the financial crisis, my family personally went through, some hard hits in the real estate market. And had we been using that as collateral in that situation, that's when the bank can come in and take your assets, if I understand that correctly, right?
Right. And this way, the only asset is the actual life insurance policy. So you have to put nothing up for risk on any of
That's awesome. So it's just 5 years,
it.
just make
Yep.
sure that
5 years, you're done, and you get tax-free income. And again, the only thing is, Phil, you have to qualify income-wise, and you have to be relatively healthy.
yeah, because
Uh,
that's fully underwritten, right?
Right, fully underwritten. It just really doesn't work for somebody that might not be healthy, or a lot of times smokers and stuff, because the cost of insurance is too much. And this thing isn't designed to see how big a policy we can sell somebody. It's designed for one thing only, is tax-free income. But Phil, the biggest thing too is a lot of business owners will use this with their key employees. Don't forget that when you talk to clients and
Yeah,
stuff.
that's a very interesting to me because I do a lot of business with successful contractors and whatnot. It's not like you have to have a big tech company that's going gangbusters, you
Right.
know.
So, and again, if you do something on a key employee on something like this, you got the bank using all their money. The corporation isn't using any of their money. Let the bank take care of all of this. You retain the key employee, and you can still get, like a split dollar arrangement. And that's something the folks are going to have to talk to you about. But again, a lot of business owners really, really like this product for themselves, number one, and number two is key employees. But the,
Excellent. Yeah, we'll definitely cover that on a case by case basis as we, talk to our various clients. One of the other things we discussed that really resonated with me was, let's talk about that tax-free component real quick because I think it needs further explaining. When you say tax-free, the reason being is that when you finally start taking or have the ability to take the money out in year 15 going forward, you're actually taking loans against that cash policy that,
right,
and that's why it's tax-free. It's not actual payment. You take a loan against the cash value, and then
yeah,
eventually when you pass, that loan is paid off out of the death benefit and then the rest of the money that's left over goes on to the beneficiaries. Is that correct?
correct. That is actually correct. And again, if you really want to dig deep, dig into section 7702T in the IRS code, and that explains how you can get this all tax free. So again, it's just people have been doing it for years with life insurance. So
Yeah, I think
um,
some of the big people that, I know a lot of times we talk about, I think like Ray Kroc and the Disney family, back when these things were really, only
mhm.
available in their premium financing, initial version. That's how a lot of these people with these large family estates going, moving from wealth from one generation to the next is they were basically able to take loans against this stuff, therefore not creating a taxable event.
You got to understand this is how the wealthy stay wealthy, and I can't get it any more general than that. So if you have any clients that are looking at this, at least take a look at it, And one of the bigger things, if I can right now, Phil, is I'm a little older and stuff, but I'd like to do one of these on my children or even grandchildren.
you cut me off where I was going next. That's
Oh,
all.
I'm sorry. Okay, but again, that's what I'm seeing more anymore is the kids really don't qualify because of either income, but mom and dad qualify greatly, and if they want to gift money to them, they can give up to what is it, $38,000 a year. Well, we have a lot of parents now that are gifting it to you have to be 18 or older to get in it, but they'll gift it to the child writes a check, gets into the Kaizen for 5 years. And if they're 20 years old by 25, they got this thing all done. I mean, you can't believe the numbers that shows here. And again, the partner, Uncle Sam, gets none of this stuff. Now, you don't have to always wait to 65 to take the money out. I mean, I've got a lot of folks here when they're younger children, and I mean 20 or older, say in 20, 25 years, they want to buy or pay off their house. There's a lot of cash value in here. The kids can use it for that.
Yeah, and
Okay.
I think
Yeah.
you hit one of the things that always comes up, and I don't have to tell you this, but it amazes me. People. I think you had a saying for it. It's like what the day that you're young and healthy and you want life insurance, you can get everything that you get that you want. Many
Yeah.
carriers, as much coverage, blah blah blah. But when you find out that you actually really need life insurance, that's when your options are limited. And usually, what
Yeah.
triggers that with clients that I run into is all of a sudden they realize they're not spring chickens anymore and they might
Yeah.
have built up some diabetes or they smoke or whatever the case may be,
Yep.
and then that's when options first of all get limited and then what's left for you is extremely expensive for a lower amount of coverage. And I think that the thing that really resonates when I'm talking to clients about using Kaizen for a wealth transfer vehicle is protecting that younger child if you have the assets to do so and to commit to it, because
Yeah,
they're young and healthy. They should be able to qualify. The money grows, they get all the benefits. They don't have to take it out, when you're
right.
15 when the bank disappears. But let's say they get married, even if they're not married or don't, they're still getting through college. Maybe they're going for, a doctorate or something, whatever the case is. Later on down the road, they've been healthy. They have a death benefit that goes along with it. So assuming that, their
Yeah.
path incorporates, the idea of getting married, having kids, that eventually grow into, college expenses or, a home. So, I think that's where you've, from us older people on up, that if you use that as a wealth transfer vehicle for that, aspect, it's super powerful in its own right. It's just
Well, and Phil, you bring up a good point too. I think the biggest thing being on the older part of that conversation is, 35, 40 years from now, I just ask myself and I ask clients, how old will you be? And 99% of them say, well, I'm going to be long gone. But again, the biggest thing is when they're getting that check every year and it's completely tax free and they're getting it for 20, 25 years, who do you think they're going to be thinking of? And it's usually grandpa and grandma or mom and dad.
right.
So the biggest thing there is what I like about it when I talk to clients is you're kind of giving them immortality. So again, older folks really like that yeah, I'm not going to be here, but these kids are going to be benefiting from mom and dad for 25, 30 years when it comes to tax-free retirement. Because where do you think taxes are going? And again, if you look 15, 20, 25 years from now, I'm just so afraid of what taxes are going to be that's why I want to get this stuff on the younger generation.
That's awesome. That's awesome. Well, let's kind of wrap things up there, Marty. I
Okay.
think we covered the broad strokes. To any of our potential clients that are watching this video, the whole goal here is to try to give you an overview to watch in your time. We're obviously happy to get more in depth on our website, and or a link down below that you're going to be able to click on the estimator, and that can take you to our branded website that's part of NIW, who is the
Yeah.
big partner in the background, and you can play around with it and put in the amounts that you want to contribute. If you want to do 20,000 a year to start, or go to 50, just to whatever works for your budget,
Yeah.
and then you can see how that stuff grows, and then we can talk a little bit more in depth and
And
about any
Phil, there's
other
there's
aspects.
headings and all of that stuff, as you well know, that will answer everything we discussed here the last 10
Right.
minutes. So dig
That's
in
awesome.
there, and I always tell clients, you get the website, go in and look at it, keep a yellow pad next to you, write the questions down where you don't really understand, and then folks have Phil give you a call to answer them questions. Give yourself about 7 to 10 days. I usually have my prospects look at this, and then I usually follow up with a call and Marty, I just don't understand this or that. So make it more clear to them because I want this to be, and I know you do too, Phil, totally transparent. You got to understand what this is. And again, a 15-year commitment where you're done in 5, but you got tax-free retirement. So you're the guy to talk to about that. Okay.
Excellent. Well, thanks for taking the time, Marty. And just for the clients that are watching this, Marty and I talk all the time. He lives in Iowa. I live in St. Augustine, Florida, but our, big partners out in San Diego and Dallas. So we're all over the place all the time. We do a lot of business over Zoom calls or just the phone. But as needed, Marty's made himself available to hop on a call and explain more in detail because he can get into all those extra details more so than myself, and we can just cover your questions and interest and then take it from there as things progress. So thanks, Marty, so much for your time on
You
this.
bet, Phil. Anytime. Glad to help.
Not a problem. You have a great day, and we'll talk to you as needed. Have a good one.
Okay. You too.
Thanks.